Okay, everyone, and welcome to another episode of Quick Take. Today we are looking at ASX, and I'm not talking about the market, I am talking about the actual company, Australian Stock Exchange, so ASX Limited company. So the market is run by the company, and they do various things, helping with IPOs and stuff like that. So if you go to the website asx.com, that's what it is. So so that's pretty much it about that's what I know about the company. I know that it exists, never really looked into it, but it's kind of, so this is everything it does: providing security exchanges and ancillary services, derivative exchange, ancillary services, registry, depository, settlement. So basically anything to do with like the transactions within the ASX that they handle, from the sound of it. So let's look at the company really. Let's go straight to financial, go to ratios and have a look there. Okay, so ratios 27, not bad. And let me see the quick ratio, nothing. Current ratio is 1, so I assume the quick ratio would be even smaller. Usually the quick ratio is smaller than the current ratio. Okay, jumping straight to the cash flow. And let's look at annual cash flow. So, whoa, what? That's crazy. Operating activity's gone up by 10 times or even more than 10 times, cash receipts. Interest paid, investing activities, financing activity. So it's just paying out dividends. Oh yeah, I didn't see the dividends there. Maybe we could go to ASX and find a dividend and see what it's like. I like to check dividends via the actual ASX website. 3.3%. That's not bad actually. All right, that's good. Looking good so far. Balance sheet. Just double checking. Internet is not doing well. There you go. Cool. And annual. Current assets gone up by, what's that? $2 billion. Total assets gone up also. Let's see, cash. So they wouldn't have any inventory because they wouldn't hold any inventory. Cash. Current liabilities gone up also. And what we can do is find out the growth rate, compare between the growth rate of the liabilities and the growth rate of the assets. See if it's you want the growth rate, the assets, to go faster than the liabilities. It's mean they're more productive, simplistically. So let's have a look at that. Just compare the previous 12 months. So 14,641 divided by 12,678. So that's around 15%. And let's look at total current liabilities. 13,346 divided by 11138. So liabilities going up at 19%, so higher than the actual current assets. Like I said, you prefer like the assets to go up higher. But maybe let's look at the cash and see how it is. Maybe what we could do, leave that there and open up. Let's see the cash flow statement, and we'll open up the income statement also. And then after this, we're going to jump straight over the chart to see if at the moment I'm liking the company. But let's have a look at the chart to see if there's anything that we can do. Okay, so really the net change in operating, so cash from operating activity, it's gone up. Like I said, it's more than 334 divided by 18. What am I doing? 1334 divided by 90, let's say. And so that's more than 14 times. So that's a good thing. So operating cash flow has been going up quite nicely. So we already discussed that. Yeah, that's always a good sign. So it seems like, look at it, it's changing cash drop, and then now it's kind of come back up. That's always a good sign. All right, balance sheet, isn't it? No, now we're looking at the income statement now. Okay, revenues gone up by 100 million. And net income. Let me see, net income. Net income gone up by very little from the look of that. So 198 divided by 498 divided by 492. So really 1%. I mean, it you're kind of glad that it's going up, but you probably want to see it go up even faster than that. But anyways, it is what it is. At the moment, yeah, I think it's there's still a lot of potential for it. You obviously, let's have a look at the chart, see where it is. And obviously, because it's a quick take, we can't go more in depth than this really, because time constraint and all of that. But let's have a look at the chart to see what the story is like. Actually, firstly, before that, 100% franking, that's good. Annual yield of 3.32%, so that's also good. All right. So the chart here, pull that up just before. So it looks like it's doing okay, really. It's 1743.81, so double if you bought it maybe 3 years ago. That's not a bad thing. MACD is telling us there's a turning point somewhere here, so that's a good thing. Let's see the volume. The volume did spike here. The volume, so it went up for on the sale, but it's really like actually trending up, so that's not bad. So there's people coming in, interest coming in. But keep in mind, this trade here is a Friday trade, and Friday end of the week usually, because the reason why people don't want to really buy towards the end of the week, the end of the year, or, before like a long holiday, because you don't know what happened in those days when it's kind of like the market is off, and you put yourself at risk of kind of like a sudden news on the next morning, and suddenly there's not much you can do, because significant news might not produce into the next 3 days, right? Three days, and things could have progressed even worse. So that's why sales on Friday it's a little bit weaker, and we can verify that. So that's Friday. So the 21st. Let's find the 21st. So that's 28th is a Thursday, right? So that's 28th. Okay, so weird. Where's the 29th? Anyway, so 28th is a Thursday from the look of my calendar here. 28th. So what happened to 29th? So let's have a look at 22nd. 22nd low, right? And so you can see this kind of pan. 22nd, 7 day. So what are we? Math's terrible. 15.81, right? Where is 15? 15 is low. 15.18, so that's a Monday. 15.8, yeah, going low. It's lowest. So the wicked rises, then it falls, rises and fall. 8.1, yeah. So that's the reason why the volume is a little low. But from the look of it, it would be like 2 consecutive what's this one? That's the 29th. There you go. 29th high. That's significant amount of trading going on there. So, but it is kind of like a trending downward. So what I probably want to see on Monday is, see if this picks back up. So we're not 100% that this signal line crossing the MACD line really means much at the moment, because you can see multiple time it crosses, but it really didn't go up. This significant one it did, but then kind of plateau. So I'm not fully convinced. I think it's going to retrace back down to this level, the 67% mark, probably even down to 63. If it goes down there, I'll probably go in at $2,000, just put a little bit of money in and see how it goes. But really, it can go back down to 56 and really test that point. And from the looks of it, it's on its way down, so I don't want to catch that downwards momentum at all in any ways. But if it does go back up, I'm looking for signs like volume is really always a strong indicator. Maybe look at an ATR. We can pull that one up. So we're already seeing the MACD. So let's just move that out of the way and pull up the ATR. Sorry, not ATR, relative strength index. I need one, please. Okay, so we're saying that it was oversold and it's coming on ways back up. I'm not totally convinced though. Even right here it says it's oversold and it never really reached that overbought, but it still came down. Let's have a look at this. Oversold, and it's here, and when overbought, and it just continue to come up. But we got this like a divergence. So the stock price goes up, but the highs of here goes down. So that's, well, technical traders might tell you that's a signal of a turning point, which it does. So that's one occasion that is correct. So again, you're working with probability here. What I do like about the company is that it is like basically the ASX, right? And look at the net income. Net income's been increasing, so that's a good sign. But you want to also look at the growth rate of the incomes, like why suddenly it's spike here and it's not spike there. Could be because it's just a bad year for the ASX. Not a lot of companies have money, so they didn't list. But I think like there's, as long as there's good management, they're basically selling the shovel, right? Everyone's looking for gold and they're selling the shovel. So and as the market expand, them too will reap the benefit of that. So there's definitely merits in buying this company, but the question is like, when should you buy it? At the moment, I think it's not now, but I think it could be very soon. Maybe chuck in a fib and see what's going on. Let's chuck in the fib and see going on. I always get this wrong. I don't know why. Anyways, doesn't really matter. Actually, let's go at the peak here then, and move this one down to here, and let's have a look. So yeah, it could be on its way back up to this $75 dollar mark. At the moment, again, I'm just waiting for cues that it is. Otherwise, if we draw it this way and extend that out, it is sitting nicely on the 23.6 on that one. So maybe it is coming up, and it has finished its retracement. At the moment, I'm not totally convinced. I'll probably wait and probably keep a close eye on this particular stock. Can extend that out. So it has retraced to the 38.2 mark there. Again, it's hitting these critical kind of thing, but I think it's going to come back down to this particular point, but it could be, around here. So we'll have to see when the market opens. Okay, and for this particular one, see, it's just went down of this point. I definitely think it will go back up. There's no doubt about it. It just when. And I think it's if I wait a little bit more, I think I can get a good price at 67.93, and it'll come back up from there. If it does go back up, then there's always opportunity to buy, because then there might be a momentum going back up, and I want to catch that and go up instead. But I'm talking more of a trader rather than an investor right now. I think it's the two things go hand in hand. You can do technical analysis to find a good time to buy in on a stock that you really like, and there's good fundamentals for it. So let's go all the way down here and see what's happening. Yeah, so I'm looking at this and I'm kind of like, right, it feels like it's about to come into a zone that is probably a buy zone, but you don't want to just jump into a stock that just because it's dropping. That's a, it's a misconception. They do say buy low, sell high, but they didn't say buy falling and sell rising, right? No, it's not. It's just, I think it's misinterpretation of that saying. Is you just don't buy low just because it's going down, but you buy low because you know that it's gonna, or you have a really strong reasoning that it will go back up. So you gotta really know the company. So it's not buy low, sell high. It's for me, it's more of buy lower and sell higher. I think that's probably the best way. So it's more of a relative thing. Yeah, no, it's I think there's definitely opportunities in this company. I would definitely put it on a watch list and see how it goes. I definitely did consider buying it probably like 2 years back, but hindsight is always 2020. And 2 years back, we're looking at 2018, when that's probably $50. So you made pretty good money when it hits these 90s, like double your money in 2 years. 10 grand become 20 grand. That's 20 grand. That you didn't have to do any work for. So that's something that's great about investing. It is somewhat passive, but it's also an active process because you got to constantly look at stock in your portfolio and review them, or looking for other opportunities to get in and make more money. But yeah, look, definitely overall, it's definitely on a watch list of mine. Eagle eyes, I call it because you need sharp eyes on these very tentative equities. And looking at it, that the earning is growing, and again, that's what you look for in companies. It also pay dividends, and paying dividend paying stock. The dividends actually stop the stock from falling too hard and too fast, because as prices comes down, dividend yield actually goes up, and they'll reach a point where a lot of investors say, hey, this is very attractive dividend, I'm going to jump in. So then they jump in and buy, and it stopped the falling. So dividend paying stock is always has that kind of, has a slow, could have more likely to have a slower drop. So yeah, look, I'll end it here. Yeah, so if you guys like what you see, share and subscribe, leave a comment and comment, and what you want to do. If you have other thoughts, other arguments you want to bring up regarding this company or any other company, again, leave it in the comment and let people have a read. Again, be civil, and most of all, good luck and enjoy trading or investing. Bye.